Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
Can bill pay be revived at credit unions? You may remember perhaps a generation ago when bill pay was revered by financial institutions. It was viewed as creating stickier members who, having inputted a dozen or two bill pay, recipients were reluctant to change FIs because of the work involved. Bill pay lost a lot of its stick when various fintechs rolled out widgets that collected bill pay data so it could be transferred to another institution. The death blow came when many vendors, including most credit card companies, created auto-pay tools where a user can choose to pay the minimum or the balance due or amounts in between automatically, effortlessly. That's what I use to pay all my recurring bills, and the closest I've come to using old-fashioned bill pay is when I paid contractors with Zelle a couple times. Cary is on the show to tell how PayOnward plans to change that current practice. And hold on, know that PayOnward is a portfolio company of Black Dragon Capital, which talks about PayOnward this way, quote, PayOnward is a cloud-native universal payments platform that empowers community-based financial institutions to offer a full suite of AI-driven digital payment solutions for both business and consumers through an easy-to-use and efficient integrated solution. Now know that Black Dragon Capital is a private equity firm founded by Luis Hernandez Jr. He's a longtime credit union tech innovator, think the DNA core system. Hernandez is not a guest on this episode, but he's much referenced in it. Listen up. Explain to me two things. Your relationship with the venture capital company, number one. Number two, why your name? Not your personal name, which is a strange name, but that's a bad joke. But you probably heard that about 14 million times.
Yeah.
PayOnward and your relationship with the venture capital firm. Let's start with those two topics.
PayOnward is a financial payments company. PayOnward was started quite some time ago by a company called Black Dragon Capital. So Black Dragon Capital is a leading private equity company that primarily invest in technology and other services for credit unions. They've been in this business and worked with credit unions and credit union technologies for 20 years. You know, they've grown up some of the most well-respected technologies and exited those companies, and then they start over and do it again. And it's all for the benefit of the credit union business. And so I'm going to be honest, the PayOnward name was derived prior to me joining up with Black Dragon Capital. But the reality is, I think the name's somewhat self-explanatory. We're trying to figure out, and we believe we've done that with several of our solutions for the credit union vertical. We're trying to figure out how to move the payments infrastructure into kind of the next evolution of what credit unions need and desire for their members. And that's really the root of the PayOnward name is, moving everything forward.
How many credit unions is PayOnward dealing with at this point?
Well, we're a fairly new company, so I'm going to be honest with you. I came into the seat as CEO. Came into the seat as CEO a little over a year ago. In that time, we have consulted with many credit unions. We've got more than a dozen credit unions that are investing in either through Black Dragon Capital or directly with us. So we've got the industry behind us, and we built what we believe is a really needed and desired solution for the industry. But to directly answer your questions, we have no credit unions up and running. We have quite a few now that are going through the process of contractual process and onboarding. So we're about to make a big push and entry into this market, and people are about to know who we are.
What problem are you solving?
That's a good question. And if you don't mind, could I back up just a little bit and maybe tell you about myself? And that leads into why I'm here to solve the problem. Well, I've spent most of my career working kind of right at the intersection of financial services and technology, primarily been in payments, digital banking, financial infrastructure types of tech companies. And as I've helped them build and scale, we often have worked closely with financial institutions and credit unions, FIs that are trying to really modernize their digital capabilities while staying true to what we believe is their true mission, which is to serve the community. So that's what we're trying to do with PayOnward. We built a product that's focused specifically on helping credit unions modernize their payments process. But we're doing that with some periphery services. So for an example, our platform allows credit unions to offer modern payment capabilities under their own brand, including small business invoicing and small business accounts receivables and bill pay for businesses. So we have what we call our business suite. What we're finding is businesses in those communities, we're not talking about enterprise, we're talking about small to mid-sized businesses. They're struggling with a couple of things. I mean, they're overpaying fees to move money. So when they're paying their invoices, their receivables, et cetera, they're paying enormous fees to third parties. And we believe by offering this through a credit union, we can minimize the cost associated with those small businesses running their business. And then when you add in these other services like the accounts receivables, you now have a tool set that a credit union can white label, they can brand it in their own look and feel, and they can offer that as a value add to those businesses. Some of the largest banks in the world are already doing that. So what's happening in these small businesses, they're either going to those larger banks to conduct business, or they're going to third-party services. Even services that we think as P2P applications, they've really become B2B applications, which are the Venmos and the PayPals. And if you think about what's happening in that small business arena, is when somebody starts paying their bills through PayPal or Venmo, and it's happening all the time, by the way, they start leaving their funds in those third-party applications. And they're not a bank, they're not a financial institution, but they're effectively operating as kind of a neobank, if you will. The credit unions are losing out. They're losing out on those deposits from those small business customers, and they're losing out on the transactional revenue. And so the PayOnward's small business suite solves both of those problems. So we think it's a really compelling solution. And if you can allow me just another minute, on the member side, we believe we're bringing an innovative approach to two things, which is member bill pay. And the bill pay that members are currently using at credit unions, I'll be honest, it has not had any innovation in 10 to 15 years. And we're bringing a very fresh approach to member bill pay, where the same thing is happening, and you're probably doing it yourself. We have our primary account with the credit union, but the reality is I'm paying bills either directly with the vendor, right? So I'm putting my ACH details or credit card or whatever payment method directly with those vendors, or I'm paying via Venmo or PayPal or one of the other services. And so the same thing has happened on the members. So we're creating a scenario to bring these members back into the credit union to transact with their bills. And so we're really reinventing, we believe, the whole way this younger generation is going to think about member bill pay. And that's what we're trying to do. And then we're tying that directly into kind of a least cost routing P2P service. So we're basically looking to replace, in large cases, replace the Venmos or the Zelles or the PayPals. So we think we got a really cool product and track to do that. And we've seen a tremendous need and desire for those types of services.
So when you're talking to a credit union, what parts do they understand that you just went through? And what parts do they struggle to understand?
I'll use a real life examples here. We were just at GAC, and at GAC we met with dozens and dozens of CEOs, primarily CEOs, senior vice president of digital experience, technology experts, And what really resonated with them was the small business suite. The reason it resonated with them, and I could reference a study that we put in some of our stuff, but a recent payments.com intelligence study found that 41% of small businesses would consider switching a financial institution because their current institution doesn't provide the financial tools they need. And that's the exact scenario we're talking about. So when a business customer goes into a credit union, they got a business account. They might get a loan of some type. But the question is, does the credit union have other tools and services that can assist that business run their business? And we believe we have an offering that does that. And when we walk these credit union CEOs through that, they immediately get it. The small business market for a credit union is an opportunity for a huge amount of growth. Because that same stat, while it looks negative for a credit union that may be losing potentially a business, it's an opportunity, right, for those that are offering the right services. Because it's also saying 41% of small business would switch to that credit union if they were offering the financial tools that help them run their business. And so that immediately resonated with the small business and with the credit union CEOs that we were talking to. The member bill pay. The member bill pay, they really needed to see it. So we didn't just add a layer of an AI chatbot or something on top of a legacy bill pay. That's not what we've done. We built this from ground up. Matter of fact, the Black Dragon Capital founder and CEO, Luis Hernandez Jr., he was the founder of one of the leading credit union bill pay technologies ever created, which was Payveris, ultimately sold to a competing company. But when you say that, people say, okay, number one, they get it, right? They built this before, they were wildly successful. And then when they see our solution, when they see a demo of it, it starts to click. They're like, oh, these guys are doing it differently. And they're doing it differently. We can see how the younger generation could utilize this in a very different way than they're used to doing. Because traditional bill pay is dead with credit unions and banks. Very few people use it. It's declining. So we think we've reinvented, how that's going to be used. All that to say, we're seeing really good traction on both of those products.
And you make a good point about bill pay is dead, because I almost never use it. People whom I owe money to, they just scrape it out of my account by themselves.
Yeah.
And I'm quite happy with that situation. I can't actually remember the last time I used bill pay at my credit union.
No, you're right. You're right. I think a lot of it is an age gap, and you and I are probably similar there. And I seldom use it. I would use our product. Like that's what we're trying to say. I don't use it. I don't use it because the clunkiness of the existing bill pay, it just doesn't make any sense. I can just go put that information somewhere else and be done. The dilemma is a couple of things. Number one, because of the fraud, a lot of people are just defaulting by putting their credit card information in all these different vendors. I mean, I do it, everything from Netflix to Disney to your,
right. Yeah.
all of those things, and of course your utility and your gas and your power and I can go on and on. So that sounds easy. But then when something changes, when that card gets compromised, I'll be honest, I have to go switch into 40 different places. And it's a pain to do that. So that's number one. And number two, there's no incentive for me to do that. We can say it's easy. It's just as easy for me to put that information and let my bank do it, except for my bank doesn't do it that way, right? My bank forces me, my credit union, it forces me to put information in there, and then most of the time they're just cutting a paper check and sending it to whoever.
Are they still doing it that way?
They still do it. A lot of them still do it that way. It's crazy.
Wow.
Behind the scenes.
When I first wrote about that like 25 years ago, they were doing that, and I said, "Wow, this is really weird."
Yeah,
I would have thought.
They still do it. I mean, it is the craziest thing. And yeah, there's percentages depending on the bank or the credit union or the type of solution they have. They obviously batch them, so they batch payments up to your utility provider or whatever, so they're not cutting a check, but they still do that. And more importantly, the way in which you go about putting that information in, registering it, doing a recurring, like it doesn't know how much to pay this month, right? So if you put your card into, I'm just throwing out a brand here, but if you put it into DirecTV, for an example, one month my DirecTV might be $95. The next month it might be $120 because I bought something. So it doesn't the traditional bill pay doesn't know the difference. So it's kind of hard to do a recurring bill pay when, even though it's technically recurring, the dollar amounts are different. So what we're doing is we're going out and we're to the best we can, we're grabbing those in a numerous ways. We don't need to get the technical aspects of that on this call, but we're grabbing that information. So in theory, we'll know if, last month we paid $95, this month we owe $112. And then we basically, even though it's a recurring payment, we're going to pay that $112, which is really wild. And then the second thing we do that we think is really unique, and this is both on the member side and the small business side, is we're building this where we built it, where the artificial intelligence knows your incoming and outgoing flow of funds, right? So if you're a business, it knows all of your account payables and account receivables. If you're a member, in theory, it knows where all the money's coming in, and not just from the credit union account. This is from third-party accounts too. We're aggregating this stuff. So it knows where the money's coming in, and then it knows what money needs to go out. And then it also knows of that money going out, which ones have late fees attached to it, which ones have grace periods. So keep in mind, most people are stretched. They still say 60-something%, especially with the younger generation, are living paycheck to paycheck. So the idea of having those credit cards sitting out there at all your vendors, whenever it's due, it's just going to hit, right? And that's what yours does. That's what mine does. But the majority of people would rather balance when those go out. So for an example, if I'm not getting paid till Friday, I don't want that coming out on Wednesday and Thursday. I want it coming out after I get paid. And then if you owe a bill and you don't have enough money, we want to be able to reconcile that. So we want to be able to plan ahead. So our AI goes in there and says, okay, you can wait and pay this specific bill 5 days late, and there's no penalty to doing it. But if you wait and pay this one late, which you're planning on doing because you're not going to have enough cash flow, then you're going to get hit by an XYZ, $25 late fee. And so we're basically able to manage those NSFs or late fees and alleviate them. I mean, it's really cool stuff for both the business and the member. And that means something. So when you're talking about the average person that lives paycheck to paycheck, and if you can save them $20 or $25 a month or $100 a month, that'll move them back to the credit union to do business.
Does a Chase or a B of A have technology that's similar to what you're talking about?
They are getting there. They have. I have multiple bank accounts. I've got a credit union, but I've also got a top 3 bank account, and they have a lot of that intelligence built in. They're starting to put that out there where it'll tell me my expected cash flow. So it's very similar to what some of those big banks like the Truist and the Bank of America's and the Wells Fargo's are putting out. And credit unions have to compete with that because
absolutely.
Yeah.
It's, to me, that's, credit unions historically, they look at the credit union down the street and mumble to themselves that that's their competition. Of course, they also say out of the other side of the mouth that credit unions don't compete, but they do.
Right.
But to me, the real competition is not that community bank or credit union down the street. The real competition is JP Morgan Chase, Bank of America, and some fintechs. And that's about it, man.
And the third-party fintechs are a big competitor. And I think even the big banks are getting snuck up on. Well, they're not sneaking. Yeah. They're not sneaking up anymore. They know they've lost so much volume, transactional volume and deposit volume from these fintechs, and then they don't know what hit them because of that. But the big banks are starting to do things to get people to come back, and we're trying to help credit unions do the same.
Well, I think Jamie Dimon has spent more money on AI than all the credit unions put together.
Probably right. It's kind of interesting when you're talking about AI. And pretty soon, by the way, I don't think you're going to hear AI mentioned all the time, because AI, the way in which we do business, the way in which we build things, it's just going to be how it is. You're not going to preface it. Do you remember? Some of the younger guys won't even know what I'm talking about. But if you rewind back to the 90s, everybody had a web-based, like, okay, I've got a web-based application and a web-based
Right.
tool and a web-based this. You don't say that anymore. Like it's silly, right? And I think AI is going to be similar, where you fast forward, it might even just be 2 years down the road. It just is how it is. Like it's just autonomous and automatic. And you don't reference it as a, like right now we're saying AI driven and AI built, because it really is. Like AI is at the core of everything we're building. I mean, we started building this new application, in the last 2 years, and everything we're doing has AI embedded into it. We're not just laying it on the top. But pretty soon I think that nomenclature is going to change or even go away. And we're just trying to get to the forefront. Like we want bill pay, for an example, to be autonomous. Who cares if people reference it as AI or not AI? It's going to automatically do stuff. It's going to automatically create the invoices and automatically categorize everything and automatically reconcile stuff, automatically, identify the unusual payment behavior and cash flow needs. And that's what we built with these AI agents and other stuff. It just automatically happened. And we have put a stop to our AI. We don't allow payments to go out of the system without human intervention right now. I suspect that'll change. Fast forward a year, and I'm sure that'll change. People get comfortable with it. But right now we have a full stop, but we're not paying stuff without somebody at least clicking a button to say okay. But we could, we could remove
Now,
that barrier.
even small transactions.
We're going to give people the ability to do that at some point soon. But right now we're giving a full stop. Now we can aggregate those. So for an example, on a daily and weekly basis, you might say, a small business owner, you might could say anything under $100 you could approve. But I'll be honest, a lot of the fraud are small amounts, right? A lot of the fraud that happens. I mean, as a CEO of the company, I get these emails all the time. I got them just this week that says, oh, you owe $30-something for renewal to the subscription. And it's all a bunch of BS. And if you don't have the tools to detect that, I'll be honest, I might have just forwarded that to the accountant and say, hey, I forgot this, pay it. And then, you're not generally going to see that, $30 here, $20 here. I mean, everybody, I was just at GC, everybody's claiming they're AI this and AI that. And you probably had a dozen companies that's literally what they do. They are experts at artificial intelligence, but most of them aren't. Most of them have, like I said, slapped the chatbot or some integration on top of it, of a legacy system, and they're claiming they are. But I mean, we believe in using this to drive intelligence, drive decisions, and try to automate all of the processes is where it's at. And we built it from ground up to do that. So we think we've got, we're newer to the market, but we think we got a really unique position in this market.
Oh, I think so too. And
yeah.
There's a lot of old AI that's been around for a while, like machine learning, for instance, which is now being identified as AI.
Mm-hmm.
It's the same product. It's just, but now it's AI because AI is cool, and machine learning just sounds kind of clunky.
It does, yeah. Most people don't know the difference. There are some nuances there between the two, but it's yeah. There's been fragments of this that have been around for a while, for sure.
Oh, big institutions have been using machine learning for at least 25 years.
Yeah.
And with great success. I mean, that's why American Express would turn down a charge on my credit card in Detroit, buying some very expensive thing, because it knows I haven't been there. It just knows. And that was machine learning. And that stuff happened 25 years ago.
Yeah, that's crazy.
Now, why did Luis Hernandez Jr. decide he wants to put money in your hands? And I remember this guy from DNA, which was a magnificent system, absolutely magnificent.
If you number one, if you have a chance to interview him at some point, you should. He's
I've talked to him years ago.
Yeah, he's a brilliant, got a brilliant business mind. Probably one of the smartest people I've had the pleasure of meeting and working with. And he seems to have a unique ability to see things before they happen.
Well, I love this idea of saying, I mean, basically, if you hadn't mentioned Luis Hernandez Jr., I would have said, wait, why am I even talking with this guy? Bill Pay is as dead as anything could be.
Yeah.
And he's going to revive this corpse. What's this, like an old Frankenstein movie or something?
Yeah, but remember, we're not just slapping a fresh skin on an old product. We're building a
No, no,
great.
I hear you
Yeah,
there, but
yeah,
it's audacious.
yeah,
And if you go back to the DNA system, it was rethinking what a core system in a credit union looked like.
yeah.
It was a big rethink. It wasn't just, oh, well, we can put some duct tape here and a little Elmer's glue here. No, it was a fresh rethink.
Yeah, no, for
Yeah.
sure. And number one, I would encourage any of your listeners to go to the Black Dragon Capital website and look at some of their portfolio companies, and they're really hitting it out of the ballpark. And so what he's been able to do and how it translates to Pay Onward is, as a visionary, I believe he sees where the need's going to be, not what it is today, but where it's going to be months from now. And we keep mentioning bill pay. The Pay Onward is more than bill pay. It's how we're moving money and how we're automating multiple processes, around SMB and around the member side. But Lewis saw that early. He saw it early and decided to jump in and created a really strong team around building this company and this product. And I'm a privileged to be part of that. And just in the last 9 months, if you could look under the hood and see what we've done, you would be amazed at both the product side, the technology, the investors. We've got, like I said, we've got credit unions that are jumping on board and saying, "Wow, this is fantastic what you guys are doing, and we want to be a part of that." And then, of course, just the interest from a customer perspective has been really mind blowing. We've got a pipeline that's a mile long of people interested in what we're doing. So credit to Lewis and his team for really seeing ahead of the curve. What's going to be coming down the pipe. Because if you remember, rewind 18 months ago, I mean, people were just barely starting to use ChatGPT. Like, people weren't talking about how you going to take AI and change the whole workflow of the payment mechanisms. And Lewis was already building a company around that. Ultimately, he Black Dragon Capital put money into Pay Onward, and we are off to the races.
I'll go back 25 years ago, and banks and credit unions, banks in particular, thought that bill pay was wonderful because it created friction for a customer to change institutions. In other words, if I had 16 bill pay arrangements already typed into my B of A account and I get slightly mad at them today, I'm not going to change. No, it's too much of a hassle.
Mm-hmm.
Now you look at me today, I have, I think, 0 bill pay arrangements at either of my 2 major institutions because it's all American Express scrapes the money every month. I mean,
Yeah.
they do all the physical labor for me. It's wonderful. But if you could put bill pay back and create some stickiness in institutions, that would certainly turn on anybody over a certain age who remembers when that used to be super sticky.
Mm-hmm.
It's
I would agree with that. But keep in mind, on the bill pay side, you're entirely correct. The original model, not just around bill pay, around all types of services, is you get all these tentacles in there, and you have it difficult for a customer to switch, and in theory, they're locked in. And then there became a process. I don't know when it started. I was involved in several fintechs, 10 and 15 years ago, where some of this stuff started, where you were disintermediating these big banks, and you're
yeah,
providing
people created widgets that would
yeah,
scrape up all your bill pay stuff and plug it in someplace else.
yeah.
But for a number of years there, this was a banker's dream. I got you, baby.
It was. And so remember, our focus, if you look at the SMB side, it's not just bill pay. It's a solution around helping that business, run their business and run it more effectively at a lower cost. And doing that under that credit union's brand. So that's from the SMB side, that's really important to look at. It is bill pay, but it's other stuff. And the way we look at it, and we think this is accurate, is if the institution owns the payments workflow, whatever that is, so irrelevant as a bill pay receivables, then they're usually going to own that customer relationship, right? But if that money starts to move or originate outside your institution, I mean, you're in danger of losing that relationship. That relationship usually follows. And so that's what we're seeing out there, especially in the SMB side, to some degree on the member side, that the more these small business customers are utilizing third party or larger bank payment mechanisms around their bill pay, payroll, accounts receivables, their relationship becomes less sticky at that credit union. It becomes, oh, it's just a credit union account. And go back to that first stat I threw up, a lot of small businesses are moving on, right? So we really think if we could help that institution own that payment workflow, even if it means pulling in some third parties and doing some other stuff, let the credit union own that piece, then they own the customer relationship. And that's what we believe works. So the small businesses, while they're not looking for a banking product per se, they do want help running their business. And if we can help the credit unions provide that to that small business, it reinforces really the reason the credit union's there, which is the foster those customer and community relationships. And that drives the lifelong customers if you can do that.
Well, you've explained one thing I never understood. I didn't dig into it too much, but there was a time 5 or 10 years ago when every credit union in America said, "Oh, we're going to go out and get many more small business members."
Mm-hmm.
98% of them failed miserably. And they even went out and they would hire people who were experts at banks and small business services, and it still failed.
Mm-hmm.
And I think probably it failed because they didn't have those tools that you're talking about.
Yeah, if you look,
I mean, it's nice, it's wonderful. You take me out in the country club, you buy me a few martinis. Okay, so I'm going to switch my business to you. Oh wait, man, I can't do anything with you other than put my money in the account.
yeah,
You
yeah.
know, why am I leaving this community bank which has all these tools? I suspect that's why they almost universally failed.
I think you're right. I think they probably missed the mark in how they approached their value proposition to those small business customers. And I think what a lot of them did is, and they still do it today, quite frankly, because it's a profitable business. They want to go out and get the small business loans, right? So that's I talked to a very large, this would be a top 50 credit union in asset size this past week at GAC. And they've got a massive business of commercial loans to small businesses. But then if you look at their numbers of commercial business accounts, it pales in comparison. And you got to ask the question why, and I'm not presuming I necessarily know the answer, but we think we have some of the ways we solve that problem. But the question is, well, why can't you, they came to you for a loan. And the credit unions, I forgot the stat, but the credit union is by a fairly wide margin, maybe 8 to 10% or more. You're more likely to be approved for that small business loan at a credit union versus a national bank. So they're going to get these loans from credit unions, but they're not banking with them. They're not keeping their business there. Bank of America's have it. Bank of America's have white labeled version of virtually all the things I'm mentioning, but the small credit unions, the mid-sized credit unions, et cetera, don't. And
B of A also, and I'm not, what I'm about to say goes way back in history, but there was a time when I was a business partner. We both had personal accounts at B of A. One or the other of us had the brilliant idea, let's go down and get a business loan. We didn't even need the money. We just thought this would help establish us a little better, pay this thing off. We go down, we talk with the bank manager, and basically what he said is, you don't make loans for that size. I mean, just put it on a credit card. I'll give you a personal loan if you need it. But no, I'm not going to make a business. I forget we were asking for like $20,000 or something. He said, no.
It's true. Right.
Whereas a credit union will take these small dollar loans, whereas a B of A or a Chase is going to say, just let me give you a credit card with that balance on it. You know what I mean?
That's exactly right. Exactly right. So, yeah, it's amazing. I think, but overall, the credit unions, kind of the vibe I got at GAC, and just from talking to dozens and dozens of them over the past 3 months as we've rolled out this product, they're all chasing to how to increase their membership, how to increase their commercial membership. and nobody has quite put their finger on it. I mean, the larger ones that have the ability to market, they're growing. And generally, I think that the member base of credit unions grew quite well over the last couple of years, but on the commercial side, it just hasn't.
Well,
And
you see the same thing in banks where in credit unions, the top 100 credit unions are doing really pretty well,
Mhm.
and the others aren't.
Yeah,
It's
yeah,
and it's a year after year after year we see that,
yeah.
and Navy Federal grows immensely every year. Doesn't matter what kind of year it is, good year, bad year, they'll grow. Whereas the $500 million credit union is struggling, the $50 million credit union is praying for a lifeline. But
Yeah, and they can feed themselves. But basically, when you have that budget, you're able. I mean, I see them on marketing on TV all the time,
oh,
and
sure,
ads
sure.
everywhere. I mean, you're able to feed the engine once you reach a certain level, and the smaller credit unions or even the mid-sized credit unions have a hard time to do that. And what they often have to rely on is community impact initiatives and other ways to get their names out. From a business perspective, we want to try to help them do that.
Here's a question Luis Hernandez has probably asked you. And if he hasn't, he'll say, I got to call him up and ask him this question. How many credit union customers are you going to have a year from now?
I'm going to tell you, I'm not going to answer that question.
Oh,
for
come on,
for
come on.
for
Imagine I'm
for
Lewis.
for competitive reasons. I'm not going to answer that question. But we're going to have a lot. We have very robust pipeline. It will not be 1,000. It's not going to be in the upper hundreds, but it will be a lot of credit unions, and people are already talking about Pay Onward. People are, we heard our name mentioned quite a few times, and we're out there, and people are talking about us. So we're excited about the future. And Lewis has asked that question, but I'm not gonna say it on the podcast here. But we're we're uh, we're,
I
we're
assume he asked that question.
yeah, obviously those questions are asked often, but we're doing very well. We're growing very soundly and very methodically, and we'll continue that growth all this year. And I believe it just doesn't slow down based on what we're seeing.
What size institutions do you see fitting best with your tools?
That's a good question. We talk to small credit unions. We talk to 4 to 5 billion in asset size, and I would say when you get over that size, the 4 to 5 billion, you start to enter a territory where they have the resources to possibly build their own tools and partner with different types of companies to provide a more robust tool set. So generally, we're looking to that small to mid-sized credit union are probably the sweet spot. But keep in mind, we have some fairly larger than that, credit unions going through the process. So there is an interest from some of the larger ones, but generally that's not our focus. We're looking kind of right in that. I would say the 1 to 3 billion is probably the sweet spot.
Well, remember, hardly any credit unions are still around with a homebrewed core system. There used to be some. That's when it was a simpler piece of technology. It was like a Commodore 64. I don't know. I'm almost not kidding when I said Commodore 64.
Right.
But now they get core systems from third parties, period.
Yeah,
And so they're accustomed to going outside to get the technology that they need.
they
And
are. Yeah.
and the credit union I use is a multi-billion-dollar credit union. At one point, they contacted me and said, "Hey, you don't have a credit card. You're pre-approved. We'll just send the damn thing to you." I
Hmm.
said, "Oh, okay, if you insist." And
Yeah.
then I put a charge or two on it, and I go to look at the web page, and I can't figure out how to set up auto pay. Can't figure it out. I call them up, which I pretty much never do, and they said, "Oh, the reason you can't figure it out is because you can't do it."
Hmm.
I
Yeah.
said, "Wait. Every other credit card I have, and I have about a dozen others, they all self-pay, every single one. And you're telling me yours can't?" And they said, "No, we can't. It doesn't work on our system." Okay. So I never use the damn thing because I won't remember to pay it. It's
Yeah. It's a real deal, and but if you give intelligence, so for an example, using your scenario, especially in the larger credit unions, but this is true no matter how big, if they deployed a service similar to what we're providing to the SMB or even the member, we start to know their cash flow issues. And there's so many other, because that's when a minute ago I mentioned the intelligence, using AI to drive whether it's risk decisions or other intelligent buying decisions. And we're able to see a customer that says, oh, they might need a credit card for X, Y, or Z reason. And we can pass that information off, and I think we have some deeper insight than credit unions might normally have. So that's interesting. You were talking about your scenario of a credit card being thrown at you, but we hope we can deliver information to a credit union where they would say, hey, we need to be throwing credit card offers to this very defined group of people that need it and have a high percentage of chance to take us up on that offer. Just some really cool stuff we're going to be doing there.
cool.
Yeah.
Cool. You'll be intruding on other companies that are already in that space, but what the heck?
No, they'll combine it. They'll take what we have, and then they'll combine it with what they already have. There's some great companies doing that, but those companies don't have the information that we're going to have, and we don't have the information that they have. Right? They may see, they're searching other areas for it, or their loans getting close to being in default or something. They may have that information, but we're going to have some very unique, holistic cash flow information that generally the credit unions don't already have access to. So it's some pretty cool stuff.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey again. That's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.